Guys, welcome back to Train Guys. I'm Ryan Mack, and finally, Happy New Year, everyone. Finally, we are now back on the charts from this week. Excuse me. So this is Sunday, tomorrow is Monday. Today, this is going to be probably the first weekly fundamental review I've done in the last 2 weeks. I've kind of enjoyed having a little bit of time off, but not too much. I just always want to get on the charts and get trading, right? But because I know this is going to be a super busy year, I did try my best to enjoy the forced holiday, if you like. Excuse me. And make the most of it while I was off. So let's jump on and see what we've got. So this year is going to be a busy year. I have got, let me just check, this is the 5th. From the 12th of January, I am running a 4-week trading masterclass. It's going to be run every Sunday at 1 p.m. UK time, which is 8 p.m. my time. And I'm going to be taking people, excuse me, from literally zero all the way up to being confident, at trading. You're not going to be a superstar because it takes time, right? You need to then go through the emotions, the psychology, blah, blah, blah. But the point of it is, I'm literally going to be taking you from knowing absolutely nothing in the markets all the way up to be able to do fundamentals, piecing it together by yourself, checking data, technical analysis, where to enter, where to set your stop loss, where to exit the trade, i.e. your take profit, and so on and so forth, right? So you will have a massive, massive advantage when you then come back to the markets. If you're someone who's been trading for 1 year or 2 years, but you're still kind of bouncing back and forward and losing money or at break even and blah, 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 then you can still come and do this course. We've got plenty of guys in that bubble joining this course as well, okay? The first one is going to be £159 sterling. After that, I'm going to run it every 8 weeks. I'm going to run that 4-week course. So every second month, I'm going to run that course, and it's going to be £359 after that. I'm squaring people away this month because, one, it's the first time I'm promoting it. Excuse me. And two, it's just after Christmas, New Year. I know many people are like, oh man, I don't really have a lot of money left over. That's fine. I've been there myself. I know exactly how you feel. So I'm trying to square people away, right? Without any further ado, let's go. So in this video here, what we're going to be doing is our typical running through fundamentals. Grab yourself a notebook, write trades or this week's trades, whatever, fundamentals, whatever you want. And then you write strong, weak, and then neutral. As always, right? It's the same thing every single week because trading is simply just building up those good, consistent habits, okay? Doing the same thing over and over again like a robot. Leave the emotions at the door. So if you're new to my channel, you may be thinking, why is it strong, weak, and neutral, and not strong, neutral, and then weak, which makes logical sense, right? The way we kind of view things in the modern world. However, the reason why we do strong, weak, and then neutral is because once we've gone through these fundamentals on the screen here, we write down which economies turn out to be strong, which economies turn out to be weak, and which ones turn out to be neutral. They're neither weak nor strong. At the end of that, you then ignore the ones which are neutral, and you pair up a strong economy with a weak economy. So let's just say the British economy was super strong right now and the Japanese economy is weak. Then you pair up pound yen, and you know that you are only looking for buys in pound yen. Let's say the Japanese economy was super strong and the Canadian economy was super weak. You would just look at CAD GPY and you then know that you are looking for sales in CAD GPY because you're going off fundamental data. That's how it works, right? Cold, hard data. So you don't have to keep drawing those stupid fucking lines on your page and, thinking that the market knows that you've done that. So let's get cracking on, guys. Just for those of you who may be new, during the week and stuff, right, when I'm monitoring data, I get it from here, which is called tradingeconomics.com, okay? It's very similar to Forex Factory. However, it gives you 10 times more data, right? It gives you might look here and there's like 4, and you might look on Forex Factory and there's like 1 piece of info, You might come down here and there's like, I don't know, you might have 6 here, and then you look on Forex Factory and there's only 2. You know what I mean? You get far, far more data and information on here. Excuse me. Also, if you're someone who trades news moves, right, like NFT, CPI, blah, 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 yes, non-farm payroll, CPI, and so on and so forth, What you will find is when the clock strikes the time here, like look, let's say it's 8:30 p.m. The minute the clock strikes 8:30 p.m., the number will be shown here instantly, right? And if you look on Forex Factory, the number will still be going around loading. So this actually gives you a much faster indication of the numbers, and you can quickly jump in and get in at a better price if you trade the news. Okay, it's called tradingeconomics.com. Definitely check it out. The reason why I don't do my reviews on this is because, like, if I come to countries, look, for me to select the country individually is just a massive pain in the arse, right? However, oh, God's sake, I'll sign in again later. I don't need it just now anyway. But when I come here, look, it's dead easy to select the countries, okay? That's why I use this. And most of you guys are friendlier with this as well, all right? You're used to seeing this. So as you know, the way we do it is we do one economy, i.e. currency, each time, apart from Aussie, China, and New Zealand. We just do all of them together, right? And it's because they're all very closely correlated. If China does well, those other two do well. If China is doing bad, then those other two will do badly, right? They'll have a negative effect. Let's go back another week. We're going to do, obviously, a slightly extended version, right? Because we've got the Christmas period. Okay, bank holiday, everyone's off. That's fine. So let's start again. We're bank holiday. We might not even need to, Let's just have a look. Tuesday, 31st. Manufacturing PMI for China is up. Good increase there. Manufacturing PMI here is up. Sorry, it's down, but it's bullish. So let me explain that. When you look here, excuse me, and it says previous 50.3, right? And you look here and it says 50.1. Yes, it's less, but don't fool yourself by saying, oh, it's bearish. That must be being bearish. It's not bearish. As long as it is above 50, it is bullish, okay? It means things are slowing down, but you'd expect that. It's fucking January and December, you'd expect things to slow down. It's the holiday time of the year. Again, look, see when you see this from 51.5 down to 50.5, things are slowing down, but it's not yet bearish, okay? As long as it's above 50, it's bullish all day long. Once it gets below 50, i.e. 49.9 downwards, then it becomes bearish, okay? It's very important to remember that, because if you didn't know that, you're just going to look here and see that was 51.5 and now it's 50.5 and go, oh, that's bearish because it's dropped lower, right? And that's not how you read it, guys, okay? So, yeah, there's not much really to look at there. That is, well, I mean, look, we don't really have much to go by, guys. Let's just see, 0.5. Let's just see what the last one is then. Here we go. Okay, let's go back to the week of the 16th of December. Let's just see what we have. Okay, well, we have to. We don't really have much choice because it's the holidays, right? AUD bearish, 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 bullish. Other things that you're looking to see growth in China, right? If China grows, then it tells you if AUD is kind of weak and low just now, but China is growing by a good bit, then it means next month you're expecting to see potentially good things from China and potentially better things from AUD as well, right? Because if manufacturing and everything else goes up in China, they buy all of their supplies from Australia. It's a massive mining country, right? It really relies on mining. So when manufacturing goes up in China, they need to order steel, nickel, copper, tin, iron, blah, 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 gold, silver, you name it. And that all comes from, about 80% comes from Australia. So when manufacturing is up in China, that means they need to order more shit from Australia, right? And that's why if China goes up, Australia goes up. If China comes down, Australia comes down. Okay, that's the correlation. Obviously, it goes a lot deeper than that. I'm just trying to explain it very easily. What else we got here? Industrial production China slightly up, nothing crazy. Retail sales year on year down. Bearish, bearish. Unemployment rate same. Westpac consumer still minus. Oh, bearish. New Zealand bearish. Okay. Current account bearish. Bearish, bearish, not good. Inflation is up. Business confidence is down. Trade balance slightly better. Private sector credit month on month is down. When your loan rate is same. Yes, credit card spending New Zealand, that was for December 20th, year on year, is massively down, which you don't want to see it massively down, right? We also have to be aware and remember that this month's numbers, because we're now in January, will reflect December's, spending and blah blah blah, right? So we expect to see good numbers in January, right? In terms of credit card spending, blah blah blah, retail sales. We anticipate that to be good, right? Because people are doing Christmas shopping. Okay, so there's nothing really much here. It's the same again. Both of them are weak. A U D N ZD are both going down just now as weak. Of course, we need to really see this month out to get a good feeling for how the economy's kicking back in. To get a real picture, right? But going from this, Aussie is weak, New Zealand is weak for now. We're just going to have to change. Let's see what we've got coming up. Last week, they're decent numbers for China. They're okay numbers for China. So we have to keep an eye on that and see if it continues that way, right? Cakes and services. So this week coming up, we get cakes and services. We expect that to be higher. Well, we expect it to be above 50, still. Building approvals, forecast to be less. That's not good. CPI, we expect to be slightly higher. Let's see. Retail sales, expect to be higher, hopefully. CPI again. So we've got a little bit of news that we want to see this week. Nothing too major. Nothing to really write home about, but we do have to take note, right? Moving on. It gets a little bit faster now, guys, because we're doing one pair at a time. And now I know we're just going to fly back to the 15th because, look, there's nothing to even bother reporting on. Good number. Bearish. So, look, another thing on how to read this, right? A lot of people will see that is simply green. And they'll be like, oh, it's less, but it's green, so that must be good. No, it's not good. It's a negative. It's signs of being bearish. So why is it green? Because if we look here at the previous, it was 1.2%, right? They forecasted it to be 0.3%, and it came in better. It came in higher than they forecasted it to come in. So that's why it's been painted green. However, it's not a positive. It's a negative because it's lower than the previous, a good bit lower, so it's half, right? So that's another thing. I don't like when Forex Factory does that because people that don't really know how to read this properly will just they'll see that it's less, but they'll just look at the color and be like, oh, green. Green means good, red means bad. No, it doesn't. Okay. So just bear that in mind, guys. What we got? Oh, sorry, I need to go back to the 15th. We were actually getting some decent numbers out of Canada. Let's see what we've got here. Housing stats, very good. CPI month on month is at 0, so that's negative. That's the same, so that's positive. Even if it's sticky meaning it hasn't increased nor decreased, it still means it's kind of fairly strong, right? Because it hasn't decreased or increased. Trim CPI, same. That's actually come in better than forecasted. This is better than forecasted, so that's good, strong numbers, actually. Common CPI year on year is slightly lower. Foreign securities purchase, lower. Okay. Core retail sales is down, and that's down. So this is what we call mixed data, right? You get one strong 1 week, one strong 1 week, one strong 1 week, and it's what we call mixed data. Okay. CPI is obviously the stronger one out of these. CPI is doing quite well. I'm gonna put CAD at neutral for now because I just want to see some. I want to see some more solid numbers to be able to put it into strong. It's not because the economy isn't that good. And the thing is with oil is just kind of ranging just now. I know if you go into the 4 hourly or the 1 hourly, you're going to think oil's flying right now. Oil isn't doing fuck all right now, right? If you look on the weekly time frame, it isn't doing fuck all, right? It's just pulling up to get into the zone to then take it for shots so far. But again, because we're starting this new year now, we're at the beginning of the year, we need to really watch it, see what data starts to come out over this next 2, 3, 4 weeks, and then we can start to build up this yearly picture coming into the new year. All right. And then we'll get some more solid data. So what we are now, Canada is neutral. I've put it down as neutral. What have we got coming up this week? Let's have a quick look. Let's see. We have got trade balance, IVPMI, yep, we want to see that. Employment change, yep, unemployment rate. Yeah, so we have got some news this week that we want to see. So let's see. If this comes in decent, I'll probably be happy to shift it up to strong for now, okay? Now, while I've just said that, I want to make it very clear. When you're doing fundamentals, you don't just look at stuff on a week-to-week basis. So you don't look at something this week and be like, oh, it's strong. And then maybe it has bad numbers and something next week, be like, oh, it's weak. It doesn't work that way, guys, right? You really need to kind of build out this big picture. So when I'm sitting here doing fundamentals, I imagine there's a big imaginary whiteboard in front of me, right? And I've got like pound here, Canada there, USD there, JPY there. And I'm like putting CPI here, this here, PMI, but and I'm putting all these different figures in each one, and then I can just remember in my mind, okay, this one is strong, this one is weak, blah blah blah. And that's I know it's maybe weird, but that's how I do it. I do it all off by heart. I don't have to remember it. I don't have to write it down. Sorry. And yeah, that's basically how I kind of view it. Maybe that will make sense to some of you, maybe not. You will have your own way of doing things, all right. CHF is usually one that's just always neutral for me. I always have it neutral because it's CHF is always like, can you see it here? No, you can't. Oh, anyway, that is here. Like CHF, look, 0.50% inflation, right? What's the rest of them? Yeah. So it's one of the lowest inflations. So to trade CHF, it's always usually a little bit different from the other currencies. You only really want to be buying it, buying and selling, blah, 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 trading it essentially when the risk on sentiment changes from risk on to risk off, or risk off to risk on, blah, blah, blah. So it's the sentiment of the market changes is when you're probably going to get your best trades, excuse me, on CHF, right? But what are we on? Yeah, apart from that, it's the same stuff. I always just put it in pretty much always neutral because they don't have a large they don't have large data to go from. Like that's pretty shit. But that's manufacturing PMI. It's not a manufacturing country, right? So every country / economy has both manufacturing and services PMI, but some countries will be more heavily manufacturing. For example, Japan is a manufacturing country, so we expect manufacturing to be above 50, and we expect services. If services are below 50, we don't really care because although it provides services, it's not predominantly a services country, right? But if we look at GDP, the British economy, we are not a manufacturing country. We are a services country. So we would look to see services being above 50, and if manufacturing is below 50, we don't really care, right? Because we're a services country. We're not really a predominantly manufacturing country. However, if both are above 50, fantastic. If both are below 50, then okay, not so good, you still use that. So this week, we've got retail sales, CPI, foreign currency reserves, and employment rate. Okay. That's never ever changes. I'm going to put CHF in neutral. Just see what happens. Moving on as quick as we can because we still need to mark up the charts on the technical analysis. Give me 1 second, lads, to upload my Turbomatic. Thank you. Good. Okay. Excuse me. Now, we have got shitloads of news for Euro, okay, coming up this week. So let's go back 2 weeks and see what we've got. Okay, so when it comes to Euro, of course, we do take into account Spain and Italy, but we don't really give a shit at the same time. If it's year on year, yes, but the ones that we really care about when we are doing fundamentals on Euro is Germany and France, all right? They are the two big economies that really move the market. So here we've got Spanish CPI. Flash CPI year on year, it's high, so we do take that into account because it's a year on year. It's more of a nicety than, oh my God, it's going to pull the euro, out of the pits of hell. Of course, it's not going to do that. Spain isn't big enough. Spanish manufacturing PMI. So that's like bullish, bearish, 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 bullish, slightly bullish, bearish, bearish. Again, I nearly got cut out of that there, just flying through it quickly, because it says 10K and it's green, right? So you just think, oh, it's unemployment, it's green, it's good. No, it's not. Look, previous was 6K, so it's higher. It's 4,000 higher than it was previously. So that's not good because it's unemployment. Unemployment high, not good. Employment high, good. Unemployment high, not good. The reason why it's green is because it came in less than they expected. They expected it to be around 15,000 and it came in lower at 10,000. That's why Forex Factory has made it green. Don't get caught out with that, okay? But you can see here, look, Euro's dog shit. Bullish, bullish, bearish, 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 bullish, bullish, bearish, bearish, right? So overall it's bearish. So Euro again for me is remaining in the weak zone. I'm sure it was, excuse me, I'm sure it was weak before as well. It's pretty shit right now. What else have we got here? So what we got coming up this week? We have got tons. PMI this week. We've got CPI this week, which is PPI this week. We want to see it all. Unemployment rate, yeah. Yeah, we've got loads of news that we want to see this week. All right, so mark that down. And I've got Euro down as being weak. Moving on. GBP. Have you turned the aircon off? No. Okay. It's 100,000 degrees in this corner. What are we at here? 15th of December. Okay, let's have a look at pound. Right move. So that's basically mortgage applications. So why we like to look at that? It means if banks are giving out more, if they're giving out more approved mortgages, well, what are they doing? They're giving out more money, right? By approving a mortgage, they're giving you money. So that has a positive effect on the economy. But this has actually dropped, which is fine. I mean, who the fuck moves house in Christmas? You know what I mean? Flash manufacturing PMI, bearish, and it's getting worse. Bullish, and it's getting better. So remember what I said to you. I said, look, the UK is not a manufacturing country. So if we see it above 50, fantastic, right? But if we see it below 50, it's not that big of a deal because we're not a manufacturing country, right? Our economy doesn't rely on manufacturing, okay? So we expect to see manufacturing PMI below 50 when it comes to the pound, okay? Flash services, we expect to see that high because we are a services providing country. And you can see not only is it bullish, it's actually getting stronger. So fantastic. Claimant count change. That's actually good. It's went up. So you could say that that's actually a negative, right? Why? Because it went from minus 10,000 to being, 0.03. But look, they forecasted it to be 28K and it's nowhere near what they forecasted. So that's quite good. However, what do we need to remember? This is because at Christmas time, there are loads of extra jobs, which are Christmas jobs, right? Like loads of people get jobs in factories, like, picking orders for Marks and Spencer's and all this kind of stuff. I actually used to do that when I was 16. That's why I thought of it. But then, as soon as it gets to January, first week in January, second week in January, you all get binned, right? And you all know you're going to get binned. You just do it to help out over Christmas and make yourself some extra cash, So average earnings index is higher. Fantastic. That's a good bit higher. Why is it good when average earnings are higher? Because it means that if your employer is paying you more money, you have more money. If you have more money, what are you going to do with that money? You're going to spend it on more shite, right? If you spend more money on a load of shit, what happens to the economy? The economy grows, i.e. it's good for the economy, right? So that's why when we see average earnings, that's why we care about seeing average earnings. Some people have said to me before, Ryan, why would I give a shit if someone's wages are increasing? That's why, because if you make more money, you're going to spend more money. If you spend more money, you're going to stimulate the economy, which is good for the economy. Okay. Unemployment rate is a steady 4.3, so it's not getting worse. It's not getting better. That's good. CPI year on year is up, positive. Core CPI year on year is up, positive. Don't be fooled that that's red. This is just the opposite of what I spoke to you about before. If you look at previous, it was 3.3%. Now it's 3.5. Why is it red? As if it's a negative? Because they forecasted it to be 3.6. However, it never quite made it. But if you look at the previous, it was previously 3.3. Now it's 3.5. That is an increase, which is positive, okay? Don't get caught out by Forex Factory and its shitty little red and green colours, okay? PPI input month on month. It's slightly worse. PPI input month on month. That's a good bit better. RPI bullish again, better bullish. Fucking hell. Industrial order expectations. Okay, like I said, we're not a manufacturing country, so we don't give a shit. Rate, did we cut rates? No, we never cut rates. Rates are at 4.75. I would expect them to remain around that because we've got strong numbers, right? So how you can anticipate if a country is going to cut its official bank rate, its interest rate or inflation rate, whatever you want to call it, it's all the same thing. If numbers are all coming in strong, they generally don't cut into that. Now, trading can be a little bit oxymoronic where you'll say something and you'll be like, well, that's just happened. You know, like if we look at the USD, for example, numbers are still quite strong and the Fed are still cutting rates. They're just trying to hurry up and cut those rates before fucking Trump gets in, right? And just trying to get it to a steady base level and blah, blah, blah. I won't go too much into it, but you know, you just have to remember sometimes in trading things are a little bit, well, you just said that, but it's just done this. You're always going to get that in trading, right? I promise you. You just have to kind of work out in your mind, you know, how to kind of get around it. I don't know how to explain that part properly, but yeah. So the general rule of thumb is when a country's numbers are all coming in strong and good and increasing, they generally don't cut the interest rates. Why? Because if they cut the interest rates, fucking inflation will just fly sky high and they won't be able to control it. And then they're going to have to take extremely drastic measures to bring it back down, which would be like a fucking catastrophe, you know, for you, the living person in that country. Your life would be a fucking nightmare, okay? So we don't want that. It has to be controlled, you know, in a steady manner. So that's best. So let's just quickly go through this again, and I'll just shout bearish and bullish so you get an idea in your mind, is it strong or not? So look, we've got bearish, bearish, bullish, 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 bearish, bullish, 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 bearish, but we don't care about that. Same bullish. Why is 4.75 bullish? Because it's fucking that's also bullish as well. Okay, bullish and bullish. Why is 4.75 bullish? Because it's fucking fantastic. I'll show you why. Now, if you look here, central bank rates, right? This right here, this is the rates of inflation per country, you know, per economy, per country. So we've got pound in at number one, 4.75. Now, I know you're thinking, well, we've got the highest inflation. That's shit. Yes, it's shit for you and I, the everyday person who has to live in the country, because it means everything else is more expensive. You go out to the restaurant, more expensive. Put petrol in your car, more expensive. Fucking buying clothes, you know, buying your grocery shopping, more expensive. Everything's more expensive, right? So it's shit for you and I as the consumer, okay? However, the interest rate being the highest is actually fantastic for the country. Why? Because with the interest rates at its highest, that means if you are an investor, you want to invest your money, and I'm not talking about you and I putting fucking 20 quid in the bingo. I'm talking about some guys who have got, you know, 500 million to put here, 1.2 billion to put here, you know, the big boys, right? When they look at inflation right away, they know where they're going to get their highest return from. So if the pound economy inflation is at the official bank rate is at 4.75%, that means me as a big boy whale investor about to drop 1.2 billion into the UK via investment, i.e. buying bonds. That means, excuse me, I know right away the UK is going to give me the highest return. How do I know that? Because it tells me right there. It tells me that if I invest 1.2 fucking billion into the UK, my return, my yield is 4.75%. If I had money in the Swiss franc, it was previously like 1.25 or 1.75 or something, and they've just dropped it to 0.50. What am I going to do? I'm going to be taking all my fucking money out that I've invested in the Swiss franc, and I'm going to be putting it into the pound. Why? Because if I keep it in the Swiss franc, I'm going to be getting a percentage return of 0.5%. If I take that same money and I invest it in the UK is going to give me 4.5% return on my money. So the question is, why the fuck would I keep my money in the Swiss franc? The answer is, you wouldn't unless you're a fucking nutter, right? Because then you're going to be losing yourself fucking 4.4%, 4.25%. I mean, you're talking at, billions. That's big money, right? Sorry, just topping this up. Excuse me. So that's how it goes. And on top of that, why is that then good for a currency if you're trading Forex, right? So why it's good to know about bonds if you're trading Forex is because when a big investor wants to buy bonds in a country, right? So let's say I'm an investor, I currently have my money in Swiss franc, and I now, because they've dropped rates to 0.5, UK's at 4.75, I now want to buy UK bonds, right? Well, you might say to me, well, Ryan, that by me taking my money from Swiss franc, putting 1.2 billion into the British economy, that helps the British economy, So how does that help me in Forex? Well, here's why it has an impact on Forex. When an investor wishes to buy bonds, i.e. invest in a country, if they're going to invest in a country, they'll buy government bonds, right? When an investor wants to buy government bonds, you must purchase those bonds using the currency of the country you wish to invest in. So if I'm in Swiss franc and I want to buy British bonds, I cannot buy British bonds using Swiss francs. I need to cash in my Swiss francs. I need to convert them to pound sterling. And then I need to use the pound sterling to then buy the British bonds. What does that do? There's a massive influx of pound sterling. There's a massive demand, I should say, sorry. When people are, switching their money from all these little shitty ones down here to invest in the UK, there's this massive demand for pound sterling, which then gives strength to the pound. You see? So that's where it then comes in as to why should I give a shit about, bonds and inflation rates. When it comes to Forex, that's why you care, okay? Pound is bullish. I mean, again, look, that was the 15th of December. Let's see what else we've got. But it was strong before then, right? I've really liked it. Again, strong, bullish. Bullish. Bearish, that's the manufacturing, who cares? Bullish. Mortgage approvals, okay. Slightly bearish, but it's not enough. Net lending to individuals has dropped. Net lending has dropped. So, look, it's a yellow folder. It's not something we really, really care about, but it is something we have to keep an eye on, right? Because if banks aren't lending money, then people aren't spending money. But what else do I have to remember? This is December and stuff. It's coming into Christmas. Well, these are kind of early December, late November's numbers. So things do slow down, right? What we got coming up? We'll get services PMI this week. We want to see that. Retail sales year on year. Yet want to see that. We do expect them to be slightly higher. Why? Because it's what do you call it? Christmas, right? But also remember, if this is January, this should now be coming in December's numbers. Okay, so these should be high. Construction PMI. I mean, if it's high, great. But you would expect it to be lower, right? Because we've got holidays and blah blah blah. Housing equity withdrawal. 30-year bond. Right, so we don't have tons of news this week that we're dying to see, okay? But we'll keep a look. For me, GBP is strong, okay? Moving on, guys. Japanese yen. I don't even know why we look at this, because Japan is fucked. But let's have a look. Okay, 22nd of December, Japanese CPI core year on year is up slightly. Okay, that's good. SPPI, sorry, up slightly. Okay, good. It's not enough, to pull it out of the fucking depths of hell. Tokyo core CPI year on year 2.5, 2.4 is up slightly, so that's decent. Unemployment rate is steady. Prelim industrial production is down again. Don't look at that being green and think it's positive. It's went from positive 2.8 to minus 2.3. And Japan is a manufacturing country. They heavily rely upon that, so that's not good. Retail sales year on year is up again. That is good, but we have to remember it's Christmas numbers, right? Let's look at the week before that as well, just to get a kind of better idea. Core machinery orders month on month, yes, it's up, but it's a month on month, so we have to take that into consideration. It's not the best. Flash manufacturing PMI still below 50. It's still bearish. Yes, it's getting slightly better, but it's still bearish, guys. It's not bullish. Territory activity month on month, it's still shit. Trade balance, shit. Policy still 0.25. They can't increase rates, guys, because everything's just too bad right now. You can't increase rates. If they increase rates right now, with the way everything's going, people wouldn't be able to afford to live. It's a kind of, you'd have 2 and 3 jobs, and you wouldn't have any money left before payday. You'd still be fucked, you know. So that's why they can't increase rates. And the reason why countries want to increase rates is because it promotes people investing in the country. Who wants to invest in Japan when their interest rate is 0.25? Fucking ain't nobody investing in that, you know. National core CPI year on year is up. Okay, it's still shit, guys. It's not. There's not enough data here to switch it into strong for me. So let's have a look. I mean, things are getting slightly better, yeah, but nah, we don't really have much news this week either on Japanese yen. So for me, yen is still weak. Excuse me. Last but not least, and then after this, we're going to crack on to the technical analysis, right? Let's see what we've got. I might show you data as well. Let's see what we've got data-wise. So let's go back and have a look at USD. Core durable goods orders. Okay, bearish, 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 bullish, bearish, bullish. Sorry, but I mean it's not going to affect it really. Unemployment claims, that's good. Unemployment claims are less, but I remember these are Christmas numbers, right? So there's always a lot of Christmas work. So these may not be real numbers, but it is still, yeah, the point is it is still bullish for now, okay? It's a good thing. Good trades balance, bearish, bearish, crude oil inventories. So there's so with crude oil inventories, obviously if it's at minus 4.2, why is that a good thing? Because it means that there is more demand than there is supply. However, you need to remember with the rest that everything else is going on in the world when it comes to oil, there are thousands upon thousands of rigs which are just like churning over at bare minimum right now. They're just ticking over. They're not actively pumping to get, you know, every barrel out the ground. They're just churning over because the price of oil is so shit right now. What again, the reason why that is as well, last year, and it's anticipated this year as well, is that China were responsible for 70% of purchasing all oil, and then last year they only purchased 20%, leaving a 50% gap, which nobody on the planet can fill that, right? And it's anticipated potentially going to be the same this year. So a lot of the big oil companies, they're just ticking over. They're just pumping out, you know, bare minimum barrels. So when you see this and you're like, wow, there's huge demand, it's like, you need the context, guys. This would be true if, you know, all the oil rigs were in full whack, and then it's like, wow, massive demand, oil rigs are in full pelt, fucking, then it'd be like, right, the price of oil is going to fly, right? But you have to remember, oil companies are barely churning anything out now, so the oil that's being bought up is just like, it's a low volume of oil, even although it's all being purchased. You see what I'm saying? So you need the whole fucking spectrum of context there, okay? And what else do we have? Oil is currently below $75 a barrel. And when oil is below $75 a barrel, it means that oil companies are losing money because it costs them $75 per barrel to get a barrel out of the ground, right? So they only make profit when it's above $75 a barrel. And what else? What was I going to say there? Yeah, I think that's it. So yeah, they're currently losing money just now. Okay, so USD, that's pretty shit. Let's have a look. Chicago PMI down. Pending home sales is up, so that's bullish. Composite. So the S&P composite, yes, it's dropped, but it is higher than forecast, which still shows us that there is some strength there. Okay, yes, it's dropped, but there is some. It is still quite strong. That's dropped again. We anticipate it's only a month on month, so we don't really care about that because it's month on month. What we really care about is quarter on quarter, year on year. Unemployment claims massively low. That's great. It's bullish. This is still bearish, but look, it's getting stronger, right? So, manufacturing is picking up in the US. I'd imagine that's for people anticipating Trump coming in. He's going to be fantastic. Construction spending month on month. Okay, we don't really care. Crude oil inventories. Yeah, let's see, it's dropped again. So demand has got less. Blah blah blah. It's because it's a holiday season. ISM manufacturing is increasing, but it's still bearish, right? Still bearish. ISM manufacturing prices is bullish, and yeah, that doesn't count. What we've got coming up this this week, sorry. We've got PMI, we've got jolts, yeah, it's a good week. We've got non-farm payroll, unemployment claims, non-farm payroll down the bottom on a Friday. Yeah, we do. So yeah, it's NFP week. You know what happens in NFP week, guys? Markets can be a bit shitty. Let's have a look at what we anticipate. We're anticipating good, strong numbers here, okay? So let's see what comes in. For now, what did I have USD at last time? I had it at strong, the same as pound. I'm still going to keep it as strong for now. I know that last week had shittier numbers, but like I said, you don't base it on week to week. You don't look on this week and be like, oh, that was a bad week. You know, it's now suddenly weak. It's not like that. This is what makes fundamentals a little bit tricky in the beginning. It takes you about 4 to 6 weeks to kind of wrap your head around it because you need to be able to look at the big picture, look at all different pieces, you know, and blah, blah, blah. So I will keep USD at strong because it was strong. Oh, it's been strong the whole year. And bonds and everything are up, right? So that's why, again, I've kept it strong. So that is us based on fundamentals. Quick recap before we go into technical analysis. I've got down strong GBP, USD, weak AUD, NZD, EUR, Japanese yen, and neutral for now. I've got CAD, CHF. We obviously want to see more data coming out in the next couple of weeks to kind of give us that bigger picture because this is the very beginning of the new year, right? So we will be looking out for that, guys. Okay. So all you would do here is you would just match up. You would score out this. You now match up strong pairs to weak pairs, and obviously depending on the where are we? I'll make this smaller so you don't focus on my mush. So where are we? Aussie USD. You'd be looking for sells, yeah, but you can't sell from here, right? You can't sell into this fucking zone. You needed to sell from up here, which, look, as you can see, we already had that marked up, right? That's your beautiful entry there. I mean, look, this candle here is a 1 week candle. 1 fucking week. So you can wait the entire week for this to close. Then you can enter, right? And then you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You have got 13 weeks. You can wait for a week, let that close. Then you've got 13 weeks, right, for that to run down. How many pips was that? This is obviously based on swing trading. And you've just picked up 643 pips, all right? Let's see what that one is. So you could be 109 pips. So look, it always happens. It always happens. And this is the way that we will be going forward in trading, guys. Look, there it is. Bang. So for my method of trading, guys, right, I don't trade everything that fucking moves. I literally wait, look, wait, boom. I would trade that, yes. Because back up, I would trade that, yes. This, I would just ignore. Break below, previous support is broken. When previous support is broken, because back up becomes the new resistance, I would trade that, yes. close your 80%, blah, blah, blah. As it goes back up, yes, you could take that again, rejects in the 200 EMA, away we go. This, I wouldn't bother adding into this. This is just a range. As it comes back here, I'd probably have scaled into this, and come down as part of my method. That's usually what I look for. But I'm just giving you an idea now how you would match these up, right? I'm not trying to be a shoulda, woulda, coulda. What else? Pound. Let's have a look. Pound AUD, so pound is strong, AUD is weak. Yep, so there we go. We'll look for buys. And again, what do you notice here? Candles are above the 200 EMA, which if you don't know anything about fundamentals and you're like, man, we're looking for buys or sells, when the candles are above the 200 EMA on the higher time frames, i.e. the daily, the weekly, the monthly, you're looking for buys. When the candles are below, there you go, when the candles are below the 200 EMA on the higher time frames, not the 15 minute, the 30 minute, and all that bullshit, the higher time frames, the weekly, the daily, the 4 hour, you're looking for sales. That's it. Look, if the candles are below the 200, you're looking for sales. If they are above the 200, you're looking for buys. At this point, you just look, this is just a big rangy mess, right? It's just bullshit, but you get the point now. It's finally broken above, boom, away it goes. So you can't enter here yet because you're going to be entering a trade into, the previous resistance. You would never fucking do that. So you need to wait for it to pull back. This is quite messy. I probably wouldn't take it. It's dog shit. But that's essentially how you would do it, right? What else we got? Let me just go through every single pair now, right? And we will see what we will be looking to trade. So, AUD CAD. I can mark it up, but I wouldn't be looking to trade it. So I only trade a stronger currency with a weak currency. I do not trade, a weak against a neutral against a neutral, a weak against weak. I just don't do it because you get a horrible shitty range. You want a divergence of economies, right? So you want one economy to be very strong and one economy to be very weak. When you get that, you either get an uptrend or a downtrend. That's how it plays out, all right? And these, look, small candle, large engulfing, comes back, retest, rejects, boom, melts. Retest, rejects, melts. So, yeah, this is exactly what we're looking for. What do we want to see here? Let's have a look at the bigger picture for a moment. It's definitely, in fact, two of them are shit. So, yeah, now here's the thing, right? I just want to explain this to you. Here we've got the small candle, large engulfing, blah, 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 previous support. Now, can you buy this? Can you enter a buy from here and ride it back up? The answer is yes. Yes, you can, right? I just don't trade it. We don't have any divergence here. Look, we're neither above or below. We're just bouncing. We're just ranging around. It's totally shit. It's totally messy. There's no clear divergence in being above the EMA, below the EMA, and blah, 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 right? So, can you trade this from here when it rejects here? Can you trade it back up? Yes, you absolutely can, okay? I'm not doing it. I only take trend trades with pairs which are strong against the weak, all right? So let me just clear up my screens. Just going to remove everything. Right, so this is, of course, sells all day long, guys, right? Sells all freaking day long. You just can't sell it from here. You're selling it into an all-time fucking low, right? So you'd have to be off your nut. You wouldn't sell it. You need to wait for it to come back up. The first area would be here, right? Second would be previous. Here we are. Previous support, once broken, becomes the new resistance. You're really just looking at about this area here, okay? But I would honestly just anticipate it's going to come around here and then melt, okay? Boom, boom, boom. That's what we want to see, all right? Move that up and change the color because it's bearish to red. There we go. Let me just see. But again, look, just to make you aware, I'm just simply showing you how I would look for my entries, right? Your stop loss is going to be above here, blah, blah, blah. It's probably going to go back up, retest this 200 EMA, and then melt. This is probably going to take about a month to play out. That's going to be about 4, 5, maybe even 6 weeks to actually play out, right? So we're nowhere near an entry now. So later, when the market finally gets to that area, I will, of course, then be looking at the fundamentals and saying, like, right, is one strong, is one weak, blah, blah, blah. And then we may look to trade it. But you notice, like, I've just left this blank. That means I'm not interested in it, okay? Japanese and Aussie, yeah, both are dog shit. I wouldn't be trading this. Let me just clean up the screen. Yeah, it is just pretty dog shit. Look, this came down. You see, look how it's banged right in there. Small candle, large engulfing, retest away. But they're two shit economies, so I'm not even going to waste my time. I'm not. The markups are fine. Aussie USD. So look, what we've got here, right? We can absolutely end up coming down to here, right? I'm just going to mark that down. We can absolutely end up coming down to here, okay? So the chances of this, wait, I've just removed this, right, because it's already played out. The chances of this going like that, coming back up here, and then melting down again is very slim. Now, could it happen? Yes, it absolutely could, but it's very slim, right? So what are we looking to see here? We are predominantly, wait, I just moved this, sorry. So we've got this one here, right? Drag it across. So what you're ideally looking for is you want to see this break below here. You want to see it come back up and retest this and then drop down, right? That's going to be your entry right here when it goes back up and retest. The previous support, once it's broken, becomes your new resistance. That's your entry, not this. This is not your entry. This is your entry, right? When it goes back up for that retest, enter here, stop loss above here and above here if you wish. And away it goes, right? That's going to be the trade. Let's just see, is it going to even be worth it? Yeah, 630 pips. It's definitely worth it. Okay, so that's all you're waiting for. We're just biding our time now for this to break down here and go. Now, if it doesn't, of course, you might get a move like this where it comes down, retest, rejects here, comes back up, boom, and it does this, bang, and then it starts coming down, you know? And if it does that, happy days. So our entry is going to be here, or it's going to be up here, right? That's it. It's that fucking simple, you know? That is it. Moving on. So I'm going to mark this red because it is something that we were looking to take fairly soon, right? And there is a divergence between Aussie and USD. Euro AUD, it's a dog shit pair. I'm not even going to bother marking that up. It's shit. Look, I mean, it's been ranging since April 2023. It's been ranging, right? I ain't interested, guys. It's a dog shit pair. CAD, pretty much the same dog shit. Let's just move all this. Excuse me. Both economies are shit, so I'm going to turn that off. I'll come back and see it later. I'm not interested just now. Euro CHF will be sells. Again, you just can't sell from here because it's an all-time low. So, yeah, you really just want to see this, to be honest with you. Now I can move this down. This is, if it comes up here and rejects here, happy days. But when I make that red, you obviously just want to see this, right? Bish, bash, bosh. But remember, we've got a long way to go before we see this, guys. All right, so we do have to remember that. I'm not even going to mark it up as in paint it red because it's about 6 weeks, you know, so we don't need to bother. Japanese yen, euro. Both of them are shit. It would be buys because the euro, even though it's shit, is still better than the Japanese yen right now, right? But we're starting to see euro numbers getting worse. Japan's showing a little bit of growth. So what you'll find is you might find that this starts pushing down to either here or it even breaks down to here. I am only looking for buys in this once it gets to these areas, and then only if euro is then strong at that point and Japanese yen is then weak. The only time that I am then considering sales in the likes of euro, Japanese yen is when it literally, guys, comes all the way down, boom, breaks below here, comes back up, and then, this part here, and then goes down. This is the only time right here that I would be looking to sell Japanese yen. Now, you might say, well, you could have got it from there and made all this money, blah, blah, blah. coulda, woulda, fucking shoulda. That's all bullshit. It's not the good trade. That right there is your confirmation trade, and then you just let it run for weeks and weeks and weeks and weeks, right? But at the same time, when this plays out, you have to make sure that euro is completely weak and dog shit, and Japanese yen is showing some real solid fucking growth. Manufacturing's up, employment's up, unemployment's down, retail sales are up, average earnings are up, credit card spending is fucking up. Blah blah blah. So that's what you need to make sure, right? If that's the case, then you can enter the sell. If it comes down here and does that, and it's still not the case, and it's still euro shit, Japanese a little bit strong, Japanese shit, euro's a little bit strong, then you just fucking ignore it. You don't have to take the trade, right? This is something that new traders just don't understand. You have complete control over what the fuck you decide to trade. You don't have to take everything. You just take the. You ever watched other people, regardless of me, right? Have you ever watched all these other different traders and the guys at the top, Q banks and blah blah blah? They're all like, just fucking pick your sniper shots. Just wait. Alex G is always like, just wait. You guys are trading everything that fucking moves. Like, you don't have to do that. You just wait for it to come to your zones on the higher time frames. You can do it in any time frame, right? I choose the higher time frame because you can enter it and you don't need to check it every fucking 10 minutes to see if you're making money. You can go away on holiday for 2 months and come back and you've made money because it's a swing trade, right? You just leave it. So I just prefer it that way. It's stress-free, right? Very small risk. I only risk 0.25% to 0.5% because I trade the managed accounts. And I just let them run. So if you have a losing trade, the risk is fucking tiny. But if you have a winning trade, because I'm letting it run for 2, 3, even 4 months, the gain is always massive in comparison to the potential loss, right? I'm always like, if it hits my stop loss, it's hitting my stop loss at like 120 pips. If it hits my take profit, it's hitting my take profit at 600, 700, 800 pips. So the risk to reward ratio, the way that I do it, is always massively different, right? You could have 4 losing trades and you only need 1 winning trade to bring you back. Do you know what I'm saying? However, not a lot of people like my method because not a lot of people have patience, right, to sit and fucking wait. And that's fine. Yeah, everybody has different personalities. You will find the own way that suits you, right? What's this? Euro NZD dog shit. It's a really shit pair. Don't even trade it. Just wank loot. So moving on. I'm not even going to entertain that. Pound AUD, it's buys. Look, I just think it's done the fundamentals right. I said pound is strong, AUD is weak. When you look at pound AUD, what you're going to see? You're going to see fucking buys. You just can't buy from here yet because look, you're coming right into potential resistance, right? Previous resistance. So it still buys. Candles are above the 200 EMA. Blah blah blah. However. What we need to wait and see is we need a pullback, guys. So mark up your fibs. And I also, when I use the fib, I'm I'm only interested in trades when they come down to the 786 area or the 618. If a market comes down to the 0.5 or the 500, whatever you want to call it, or the 382 and takes off, I don't chase that trade. I just ignore that trade and I let it go. I only take trades which enter area of value because that's what the Fibonacci is, right? It points out areas of value. These aren't just magic numbers that it comes to. This is showing you these numbers are showing you where the value is at. So the higher the number, i.e., 618, 786, the better the value. The lower the number, 05, 0382, there's not a lot of value there. That's the shit value, right? People just think it's a nice fucking curly whirly fucking machine that you enter. It's not. So what have we got here? Yeah, we do have 2 potential sites we can come back to. I guess you could say 3. We've got this down here, which would be phenomenal. We have got this area here, the previous support. And we also have this one. I'm going to mark up this here. But that shit is in the 500. I don't want that. This is one here. Look, see that right there? That candle there, where it's broke above, back down, retest, reject, and go. That is one, right? I'm not going to mark it up because even if it does come to there, rejects and goes, I ain't trading it. I'm just going to walk away from that, right? So let me just mark up Z618. I'm just going to mark this up here. Right. Boom. So that. So see, by doing this, right, this makes me avoid FOMO. I already know that, I ain't getting FOMO on this. And look, if you drag that across, look. Sorry with that. Look. Sorry. Previous resistance, once broken, becomes the new support, right? I'll just take that up again, put it back, just to show you that there. So I already know that anything that the market does outside of this box, or this box, I do not give a shit. I don't care what the market does outside of those boxes, right? That's it. So I don't watch that and see a candle move and think, oh shit, I better enter that. It isn't anywhere near my boxes. I only care when it gets close to my areas of interest, right? Right, we're at an hour now. Let's try and wrap this shit up. GBP Canadian dollar. Really dog shit pair. Look, however, pound is, much stronger than the Canadian dollar. Let's have a look. So why is this coming down? Obviously that part's not. This is when oil was, etc. Back 2009, when oil, etc. were flying. Canadian dollar gets a lot of strength from oil. So if oil starts to fly, Canadian dollar will get strengthened, and this, will start to come down if pound, etc. is still weak. This is definitely buys. Look, we are potentially breaking above these previous highs. I'm just going to mark that up. Hold on. Right, just drag it across. We're potentially breaking above these previous highs. You can see it right there. Broke above, retest. So, yeah, we really need to see a deeper retest. Actually, it's pretty dog shit. It's not good. Let me just do a fib, see what we've got. So that's shit, right? So right away, I know I ain't touching that. I've just simply marked it up because it's broken the previous support. Once broken, becomes a new resistance. But that's shit. I ain't trading it. Let's have a look. 786 is what I love. And, oh, sorry. The hell. And 618 is what I like. If you look at the 618, do we have anything? Yes, we've got a small candle, large engulf in here. So this is exactly what I'm looking for. Boom. Right? That's what I'm looking for. Bish, bash, bosh. Right? Green. So I now know that I only care about this trade when it hits this box here. I'm going to put a green line in there just to remind me it's this one I care about. That's it. That's all I care about. So anything else the market does outside of here, I do not give a shit. Now, if the market, let's just put this at the high here, right? Let's just put the high. If the market should not come back down, let's say it doesn't pull back down, right? Let's just say it starts to fly, then that's fine. You still use this area, it's still going to fly, come back for the retest, then you enter, and then you go, right? So that's going to be your entry once it's giving you that momentum pullback. So you've got a long wait, right? For my method, you've got a long wait because we're on the weekly time frame. That could be 4 months from now before you're going to enter that trade, right? So now you can kind of understand. I'll keep that green for now just to see what it does here. GBP CHF, dog shit. I'm not going to trade that. Pound yen is definitely buys, but I mean, I want to see it, break down here. Excuse me. It did come back and hit this, but it's not what I really like. I'm going to move that because I don't really care about that there. These are really, excuse me, these are the two that I want to see. This one here and this one here, okay? Green. GBP NZD, again, it's buys. Look, if it breaks above here, then you're going to see that. I don't trade pound NZD. Pardon me. I've got it marked up here for our guys in our Discord channel, right? But I don't trade it. It's dog shit. Spread fees are always ridiculously high. And it's the kind of trade that you'll be in it for 8 weeks and you've made about fucking 20 pence, because it hasn't moved. So I don't even trade it. This is only here for my guys, but yeah. GBP USD. Well, we expect really strong dollar, right? Let's just have a look at the dollar index, because when Trump comes in, yes, you'll get pullbacks, but look at how strong the dollar is now that people know Trump's getting back in. Look at this. I mean, these were drawn away beginning of last year. We're already breaking above massive dollar strength. So what you'll see is you will, at the beginning of the year, you'll potentially see a pullback, right? You'll potentially see this, bang. Dollar will start to drop. We'll come back down to these zones. It'll get to around here. And everybody will be like, oh, markets are crashing because Trump's in. They're fucking idiots. It's not. It's just a pullback for value. People enter and then markets will fly all through next year. I'm telling you. Mark my words. Fucking save this video if you don't believe me. And people will say, but as it pulls back, it's just a retracement. But everyone will shit their pants because they don't understand fundamentals. And they'll be like, oh, the markets are melting. It's going to be a fucking, what do you call it? A recession. And it's not. It's a load of shit. It's just a fucking market pullback, right? So, back to pound USD. Get rid of all this shit. Tidy it up. Yes, so... Yeah, we need to wait and see what it does here. Pound is quite strong. USD is quite strong. So, I don't like trading it, because it's not really part of my plan, right? Because both are strong. So let's see how it kind of pans out. I'll play this one by ear. Yeah, if it breaks down, you need to wait for the pullback here and then into the sell. I wouldn't just be taking it here, or see what else it does. But yeah, I'm not too. It does have the potential to break down here, guys. Okay, it does have that potential. So let's see what it does. We could write this down. If we're going to write it down, it would be this. Boom, 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 boom. And this right here would be our entry, right? But I'm not saying this is sales. This is just an example here. Pound is strong as well, so we really need to wait and play this one by ear, guys, okay? And see what happens later on. NZD USD is sells. Again, look, this, if you've been following me since last year, you'll probably be with me when I drew this box up here, right? Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks you could have held this trade with it never coming back to your stop loss, right? And you could have waited an entire week before even entering the trade. So when people are on the 30-minute and the 1 hour, and they're like, fuck, we need to hurry up and get in, we need to hurry up and do this. No, you don't. You could have waited an entire fucking week. You could have waited an entire week here, an entire week here, an entire week here. So there's always patience, right? Especially with my method, and you can just let it run. Okay? NZD, we are looking for sells. We just cannot sell from here. So it's either going to pull back up and retest, these zones up here. What I think it will potentially do, hold on a wee second here, wait there. So I'm going to leave this one here because that is a major zone for us. I mean, I could probably tidy it up. Let me just see. Okay, this one here. The next potential area is obviously this bottom part here, and also here, because it's your previous resistance, right? So what can happen is it may go like this, right? It's here now. It may go bang, 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 right? So you could enter here if you get a rejection. It's just not a good area of value to sell from, okay? Could you take it? Yes, you could, but it's not a good area of value to sell from. The best area of value to sell from for me is this. It's once it breaks this zone, comes back up for retest, and then comes here, right? That's it. Failing that, if the markets obviously then come back up and retest this zone, rejecting on the 200, happy fucking days. You can definitely enter here and you can enter here, okay? That's the two trades. So I'll just move this over. Okay, that's the two trades. It's going to be here and here. That's it, right? Anything the market does outside of this zone here, and after it's broken down here and came back up, anything it does out of this zone here and this zone here, I don't care, right? We don't give a shit about it. It's 1,000,000% sales. NZD CAD, both are dog shit. I mean, I know this is panned out. That was just simply trading from areas of value, right? You could have taken that and melted and got a trade, but it's dog shit. I wouldn't recommend that you take that, okay? Because both of them are very, very weak economies, so I wouldn't bother. Yeah, I'm going to make that blank. USD CAD is 1,000,000% buys. 1,000,000% buys. You just can't buy from here. Why? Because you're buying into an area of resistance, which means you're off your fucking nut, right? you're buying something when it's overvalued. So what you really need to wait for is the pullback. You need to wait for it. You need to wait for the market to come back down. Come here, boom, 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 boom. You need to wait. That's your entry down here. I'm sorry to say. So we do have we have a fair bit to go. Okay. Or your next entry is if it breaks above here, right? So it's either, look, these are your two entries, right? Bang, bang, bang. That's your entry, okay? If that doesn't happen, obviously, I'm not changing to green. Then you're waiting for this. Bang, 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 enter, bang. So that's your entry, or that's your entry once it's broke, it came back for the retest. That's it. No retest, no entry. All right. So yeah, that's pretty much it for that. USD CHF could be melts, but we're coming into a term of potentially seriously strong USD. So it's either going to be a sell from here, melt it down, or you're waiting really for it to break above, retest, and go, right? So let's see what happens there. It could still be a sell for now. So let's wait and see, right? Because we don't have the confirmation that it's broken these levels, and we are still below the 200 EMA. All right, so we need the confirmation first. I've just marked that as green, but we really don't know. USD Japanese yen is buys. Look, you can see it's hit once, hit twice, hit 3 times, 4 times, hit 5 times, hit 6 times. There's all 6 areas hit out. All freaking 6 have hit, regardless of whether I've taken them or not. They've all hit, right? You've all seen them if you've been following this. And it's because why? They're simply areas of value, guys. It is simply an area of value. That is it. So USD Japanese yen is 1,000,000% buys, but you cannot buy it from here, guys. You cannot. You really need it. The next area is going to be here. Shit. Wait. Oi, come on. Okay, drag it out. Delete. Okay, next area is going to be down here. Bish, bash, bosh. Right, that's it. Okay. Oil. Let's have a quick look. So yeah, when you look on the, as I said in my previous videos, guys, can you buy oil from here? Yes, you can, because it's good value to buy from, right? But fundamentally, you would never fucking buy it in a million years. You're only looking for sales, right? So you're going to sell from here, which is really not that great. Or, let's see what we've got here. 618. Yeah, so the real area, you get this one up here. That's decent. 786. Yeah, we have it. And then the 618. I'm just going to mark up this small candle here, large engulfing. That's all right there. Boom. That's it. So let me just remove this. So this right here, if I'm looking for sales, is really where I want to sell from, right? Bish, bash, bosh, right? That's it. That is it. Or, of course, it could be this area or this area, blah, blah, blah. Sometimes you get it when markets are just super, super messy, right? Look, you may get it that it just hits here and absolutely melts, but it's there's no value, right? So if that was going to happen, let's say the market comes to here right now and it just starts to melt, right? I'm not interested in getting in. I'm going to wait until it breaks below, comes back up for that retest, and then melts, right? I'm waiting for that. I'm waiting for it to break this previous support, come back up, previous support becomes a new resistance, enter there, and you just leave it stress-free for fucking weeks, guys. If you enter this here, yes, you're going to get in at a good price, but what is that? What is, I want to get in at a better price? What is that? That's the emotion of greed. That means you are trading based on greed and not based on logic. I've completely eliminated fear and greed from my trading. I don't give a shit how much it makes. I just say to myself, what's the best, highest probability, lowest risk, best stress-free fucking trade? It's this. It's when it breaks below here, comes back up, retest, rejects, and goes. Or if it comes up to here, retests this zone, rejects again, and then melts, then it's here. I will gladly enter here and write it down, yes. Or enter here. It's either this zone here or this zone here. That's it. I'm not, if it comes up here and rejects and then melts, I'm not interested, guys. Not interested at all. And that's it, right? If you're saying, well, I don't want to enter down here because I could have entered here and got a better price, so I'm going to make more money. What you have to question yourself, that is you basing your trading decisions based on greed. And that's probably why you're having more losses, or you're at that break-even stage and be like, fuck, because the minute you can learn to cut out greed, guys, and not give a shit whether you win or lose, you're just emotionally flat through both making money and losing money, then you will start to trade logically. When you start to trade logically, the money just necessarily follows, right? That's how it works. Gold. Let's have a look. Let's have a look. I would like to see some. So that's a 618. That's fine. I'll also mark up this 786. Yeah, boy. So this one here. Yeah, that's pretty much it. I'll wait and see what it does. So I'll just be looking for buys here, and obviously, if it turns into sells, then I'll just be waiting for it to break these, come back up, retest, reject, and then go, right? So if I'm going to take sells, I'd have to wait for it to see boom, 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 right? But it's still not the best. Why? Because candles are still above the 200 EMA. It still buys, look. It still buys all day long. You see what I'm saying? Look. Gold is just buys, right? Yeah, it's phenomenal. So I just really want to be buying it. I don't want to be selling gold. Silver down here, already marked up. This is really a fantastic area. This one here is my favourite, actually. It can go from here, absolutely, but I also like this. That's annoying me. There we go. Copper. Yeah, copper's pretty much the same from here. It could come back down and retest this zone, actually. But still buys. I would still say it's buys. Once it retests these zones here. Probably reject on a 200 EMA and then go. Let's have a look at indices quickly, and then we're going to wrap it up because it's been a long freaking video. Indices are just always buys, guys. Always freaking buys. They're amazing. Yeah, I just want to see them come down to those areas and yeah, come down to here. Oh, sorry, I'm going to mark that up. Hold on. I want to see it come to this one right here. A bush. There we go. There we go. Obviously, the lower it comes, the better, but that's what I kind of predict. Right, I'm going to clean this up. Remove 6 drawings. 786. That's a beautiful area. I'm going to mark up. So you mark up the small candle here, the small white candle. That'll be the zone it comes back to. Or, obviously up here we've got it's the 50. I don't like it. I hate the 50s, but let's just see. I'm just going to mark it up right out of an area of interest. I usually won't take it unless it comes back down lower. I won't bother with the rest because they're all the same. In fact, I will. Fuck it. I may as well just get it done while I'm here. Stop being lazy. Right, there we go. Gosh, I don't even need the fib. I know that's it right there. And the next one, I can see it clearly. Is here. Bosh. Right. Yeah. Oh, fuck's sake. I'm just going to remove them all. Remove all 6. There it is right there. Small candle. Urgent golfing. Previous resistance, once broken, becomes the new support. Boom, boom. Right? It's exactly what we're looking for. And that is us, guys. Okay, that is us. Let's see Bitcoin. I want to see Bitcoin melt down to here, actually. Yeah, that is us, guys. Thank God. I'm not even going to bother taking you through all this shit here. Data. I go through this as well, by the way. But that's another fucking hour preparing for my week ahead, right? So when people say, you know, have you prepared for the week ahead? And you're like, what the fuck does he mean prepared? This is what you do every Sunday, guys. It doesn't normally take this long. It's taking this long because I'm having to explain everything, right? When I'm just doing it myself, I can obviously fly through it. What else? So this is the last month where we are going to have our premium Discord at £97 a month. After that, it's going up to, I think it's 147, I think. £147 a month. The reasons for that, guys, I have joined multiple groups last year. Some for actually learning, which are fantastic, but that's not the point. I joined multiple for market research, and I shit you not, there is not a single course out there. There's not a single Discord group out there that provides everything we provide. I shit you not. Fundamentals, scalps, swing trades. We give you the signals. So every single time we enter a trade, we tell you, we've just entered this, guys. If you want to copy it, you can copy it and make money. On top of that, I trade managed accounts, right? Live, not funded prop. They're actually live managed accounts. Anytime that I personally take a trade, excuse me, I do all of my trading live on Discord. So you can physically watch me trade my clients' accounts, right? You can ask me questions. You can literally say to me, Ryan, well, why did you take that? Why did you enter here? What made you put the stop loss here? What made you put the take profit here? And we can cover everything, right? On top of that, because, when my method, sometimes I can be waiting here 3, 4, 5 weeks for a trade to come in and then I let it run, for the same. If there's a day where I'm sitting here and I'm like, right, there's no trades for me, I can already tell there are no trades for me. I always offer up, guys, if any of you beginners want to do one-to-ones, jump on with me. And I am more than happy, guys, to sit here for 1, 2, 3 hours at a time and run through one-to-ones for you guys anytime you want to do it. There were other Discord groups that offered that, but they were offering 4 1-hour sessions for $1,500 fucking dollars plus. There was some courses offering it for $2,300 for 4 1-hour sessions. I don't charge you any extra money for the 1-hour sessions, guys. It's all included in the monthly price, which was £97. Anyone who joins this month up until the 1st of February will continue to pay the £97 a month. If you join after the 1st of February, you will then go on to the new £147 a month. I mean, you're still getting an absolute bargain, but I'm just letting you know it's going to go up. Also, very important to note, guys, if you are on the £97 a month tariff and your payment bounces 1 month, the system will start you back on, or you can rejoin, but the system will start you back on 147 quid, unfortunately. So please be aware of that. That's not us fucking you over. That's just because your payment bounced and the system has then went back. It's then logged you out of your old payment method, which we're no longer going to have, and you will go back onto the only payment method which we have, which is 147 quid. So please bear that in mind, okay? There's nothing we can do to change that. Also, if you want to jump on my 4-week trading masterclass, where I'm going to be doing it every Sunday for 1 to 1.5 hours each Sunday, we're going to cover all the basics. Week 1, what is a pip? What is a lot? What is a spread? What the fuck is trading? Why does it even exist? And blah, blah, blah. We'll cover institutional traders, retail traders, blah, blah, blah. Week 2, we're going to cover fundamentals. So I'm going to teach you all this. I've got cheat sheets all lined up for you, blah, blah, blah. Week 3 is going to be like data, how to read kind of banking data and piece it together. Week 3 is also going to be technical analysis, and I'm going to give you homework each week. And then week 4 is going to be how you piece all of that together, how you piece the fundamentals, banking data, and technical analysis together and place the fucking trades, okay? So yeah, I'm really looking forward to it. It's going to be a great week. It's going to be a great week coming up for the new beginners, obviously, a great course coming up for the new guys that want to start on this 4-week trading masterclass, okay? If you want to jump on board, we're already at full capacity, but I'm willing to take on 1 or 2 more, just to top up. I think we're at 12. I said I was going to take 10. I think we're at 12 or 13 now. I'm happy to take up to 14, 15 if you want to jump on. I'm not going to take 20 odd. That's just too much, and I can't give you the time that really needs given to you, okay? Thanks very much, guys. I'm Ryan Mack. This is The Trading Guys. Don't forget to like, subscribe, comment, and share with your mates. Much love. Happy New Year.